everyone, welcome to Cash Out. My name is Kenneth Suna, and on Cash Out we talk about what happened in the stock market last week and what might also happen next week. I also, at the end of each episode, will go over your TikTok questions. If you follow me on TikTok, you know that most of the videos are questions. I respond to questions. I respond to every single question. I answer in video if I think it's a worthwhile question or that people would enjoy it. But sometimes, you're only allowed 60 seconds on TikTok. Sometimes I need more time to explain. So that's what I'm going to do at the end of these episodes. We'll go over your questions, and I have a lot of really good ones today. What's going to happen in the stock market? Look, we had an election last week. We had threats of civil unrest. Every state was under lockdown. I live in Washington, D.C. People were freaking out. I had friends all over the country texting me. I had some friends internationally as well going what is going on in your country? Please stay safe. And, I was just sitting there going I think it's going to be fine. I don't think anything's going to happen. We had more troops in D.C. than anywhere in the world. So you'd be a fool to show up here. And sure enough, nobody showed up. Nobody showed up anywhere. So that's good, right? No civil unrest. Good thing. But that still probably had a little bit of an impact on the markets. People were maybe a little cautious. Plus, we had this inauguration. Everyone's on edge. We have a new president. Whenever there's a new president, everyone kind of steps back and goes, all right, let's see what this guy is going to do. You've got everyone on both sides throwing out worst case scenarios. Oh, this policy is going to be chaos. Oh, this policy is going to be chaos. Oh, this is going to be great. No, it's going to be terrible. And everyone is so in the moment that we just kind of need to I'm sorry if I'm a little hyper. I just had a bunch of espresso too. Everyone needs to just kind of pull back for a second. Chill the fuck out. Take a deep breath. This is how it always is. Whenever there's a new president, markets go a little nuts. Either they sell off or they rally or whatever. We just need to not get ahead of ourselves. Everyone's getting ahead of ourselves and going, there's going to be a market crash because Biden is going to do something. There's going to be a market crash all the time, right? Markets are going to have corrections, dips, sell-offs, recessions. They happen all the time for any reason. Sometimes you can predict it, right? You can say, oh, this policy is going to wreak havoc, or this war is going to wreak havoc. And sometimes you can't predict it. Nobody could have seen COVID coming, right? Nobody could have seen it coming. And then, bam, it's here. It was poorly managed, poorly handled. 400,000 people are dead today, some crazy number. It's just insane, and the numbers keep growing. The point is, sometimes you can predict what's going to happen, and other times you can't. So we're so in the moment right now. Joe just got elected. There's people on the left who are very excited. There are people who are on the right who are not. There are people in the middle who are let's just wait and see. That's where I am right now. Let's just wait and see. Let's not get too ahead of ourselves. Let's not get too carried away. All these policies that politicians enact, sometimes they dream too big on purpose, right? They say, we're going to do this, and everyone freaks out. No, that's too much. It's crazy. That's not the plan. It's like selling a house. If I want to sell my apartment for $300,000 and I want to get $300,000 for my apartment, I'm not going to list it at $300,000 because someone's going to offer $295 or $290, and then I'm going to have to, I don't know, $290. Can you do $298? No, only $290. And then the longer it sits in the market, the lower the offers come, and someone's going to come in $289, and then I'm going to be shit, I should have taken a $295 offer. If I want to sell my place for $300,000, I list it for $315. That's how politics work too, right? You gotta overreach a little bit so you have some negotiating room to wiggle down to what you really actually want. So for everyone who's getting so carried away about the number and the things and the policies, just chill. It's probably gonna be fine. We're gonna have 4 years of, I think, economic growth, infrastructure, green energy stuff that's gonna put a lot of people to work. And everything that everyone is freaking out about, let's just wait and see before we get so reactive. When the market sold off earlier in the week, some people were messaging me on TikTok going I told you Joe Biden was going to be bad for them. It's dude, the guy just got elected. Give him a break, come on. Like Joe Biden would say, come on, man, chill out. Don't be so in the moment. There's always a story. They need stories on the news, right, to get people to watch. I think I mentioned this last week. If they come on and they go, don't worry about the sell-off today, it's just profit taking. But no one's going to watch the news. They need a story. They need to say, let's get all the talking heads talking about this policy. Ugh. It's going to be fine. So last week, the markets were pretty quiet, I think, for a lot of like overall, like if you look at the Dow, it was like up 100, down 100. There was nothing really crazy that was happening in the markets. But there is an expression on Wall Street, so goes January, goes the year. There's another expression, sell in May and go away. So these are just like, they have little expressions like that. And sell in May and go away usually means that the like big hedge fund, the big money guys, they take off in the summer. Markets kind of generally slow down. They get on their yachts, they get on their private jets, they go somewhere. And so the markets in the summer tend to be pretty quiet from May to around September, and then things pick up in September. So that's the one expression, sell in May and go away. You might have also heard of like the Santa Claus rally. That's also due in part to the big money leaving the markets, right? They're going on their trips, they're getting on their yachts and their jets and their planes, or they're going to their winter homes in Vail or whatever. And they're leaving. Who's left? Who's left to trade? But the retail investors, the people like us. And we tend to be more optimistic. It's the holidays, yay, let's buy stocks. And so the markets tend to have this little, rally after New Year's into the, in Christmas and all that stuff. And of course, like I just mentioned, so goes January, goes the year. So if the markets are down generally in January, it's seen as a bad sign. Oh, it's going to be a bad year. I don't know if that's really true. I have never really looked at like the data and seen looked at like the yearly charts and gone like, oh yeah, January was great and the markets were great that year. I don't really know if it's actually true or if it's just an expression that people say. But there is a lot to look forward to next week. We've got some really big earnings coming up. I've got my little list here. On Tuesday, and these are just some of them. So in the comments, like people are always like, you left out this one, idiot. And it's like, dude, I'm not going to go over every single earnings. These are just the ones that when I looked at the earnings for the upcoming week, these are the ones that jumped out to me. We've got Johnson & Johnson on Tuesday. So let me just go by Tuesday. Tuesday, we've got Johnson & Johnson, General Electric, Verizon, AMD, which was really hot last year. So the question is, will they continue their momentum this year? Actually, I think I had it. Let me see if I can even find. I think I had it written down on an old note. No, I don't. I have some of the other tech stocks that were up like over 100% last year. I don't have AMD. I don't know how much they were up last year. But when you get these stocks that are up like 90% over the course of a year, the logical question is, will it continue? Will it have another 90%? And, obviously there's no way to know, but I see a lot of new investors looking at something that they missed and kicking and going like, damn it, I missed a 90% rally. Well, I'm going to buy it today because I want another 90%. Well, just because you want another 90% rally doesn't mean you're going to get one. Just because you missed out on it doesn't mean you can buy it and replicate something you missed just for the sole purpose of you want 90% gains, right? Like everyone wants 90% gains. Doesn't mean you're going to get it just because you want it. You have to look at the earnings, you have to look at the economy, you have to look at a lot of things. So Johnson & Johnson is going to be interesting for me. They haven't rolled out their vaccine yet, but their vaccine is very promising because it is apparently a one-dose vaccine, and I don't know if it also requires the same like frigid, cooling technology that like all the other ones require. They have to be at like below 40 billion degrees. So I don't know about that, but their vaccine is promising. And they'll probably reflect that in the earnings. General Electric is always interesting to me just because it used to be like the big stock and now it's like a loser. Verizon is interesting. AMD, we talked about. Microsoft. Did you see that Microsoft is now making a death chatbot, like that Black Mirror episode, where you can like basically chat with someone who's died, and it like studies their videos and studies their speaking style and their mannerisms and stuff like that, and just kind of like becomes that person who's died, so you can talk to someone who's dead. It's creepy. And then we have Starbucks. Starbucks is interesting. They've expanded huge in China. I think also in India, China is not a coffee place, but they're becoming one, I guess. So Starbucks, interesting. I don't know if all of the shutdowns and stuff is going to affect it. But it would be something that I would be looking at. On Wednesday, we have my handwriting is really bad, so I don't know what this one is that I wrote. Oh well, we're gonna miss out on that one. We've got AT&T, Abbott Labs, Apple, Tesla, and Facebook, and that is on Wednesday, and that is going to be a doozy. Boeing, BA is what it is. I thought it said ZA, and I was like, what the hell is ZA? Boeing also coming out on Wednesday. So we've got Boeing, AT&T, Abbott Labs. Abbott Labs, I think, did well last year too. Apple, Tesla, and Facebook. I'm very curious about all of those, especially Apple. If they announce some sort of electric vehicle in their forecast or talk about some plans for electric vehicles, I think the stock could do very well. I have a t-shirt. Where's my t-shirt? Hold on. I'm looking for it. All right. I just made this shirt. Ask me about my favorite stock. My favorite stock is Apple. If you know my story, you know that I've held Apple since 2003 on and off. Sold it because I was listening to a broker when I was younger who was a complete moron. Bought it back after one of their splits. I love Apple. I will always love Apple. So I'm intrigued. I'm excited for their earnings. Tesla, always exciting. Always volatile too on earnings. If you want to lock in some profits, if you got it, that's your call. Facebook, also on Wednesday. Facebook is interesting to me because of this like new regulation. I've also noticed that a lot of my friends are like leaving the site in droves. Like I see like twice a week a friend going like, I'm done with Facebook, see you later. And I know a lot of that is also like, it's the trendy thing to do. Like, do you remember when that documentary came out about vegan? I can't remember what it was called, but like Arnold Schwarzenegger co-produced this little documentary about like the vegan lifestyle, and they had this guy who was like in the gym doing like the battle ropes, and he was like, I'm a meat eater, and when I do the battle, and he's like in phenomenal shape, and he's like, when I do the battle ropes, I get like 2 minutes. I've switched over to vegan. I've been a vegan for a month now, and I could do the battle ropes for 3 hours nonstop, and everyone was like, wow, vegan, and everyone got like mega upset with being vegan. I had so many friends who were like, I watched the documentary and I'm a vegan now. And, you know, it's also like minimalism, you know? Minimalism was very hot and trendy for like 2 seconds a couple years ago. And a lot of people were like, Marie Kondo, it doesn't spark joy, I'm throwing it away. And everyone got like very obsessed with minimalism. And then, you know, everyone realizes that like being a vegan sucks, and they go back to their meat eating ways. Maybe they incorporate a little bit more tofu in their diet or vegetables or whatever, but for the most part, most people, it's a trend, it's a fad. They get really excited about a movie and they think they can do battle ropes for 3 hours at the gym, and they stop eating meat and then they go back. And you know, it's the same with I think maybe the Social Dilemma and Facebook. People watched that documentary and they were like, I'm done. I'm deleting the app. I'm off it. I'm done with Facebook. I'll check in on my birthday. I think that's a trend too. I don't think everyone is like really seriously leaving in droves. I think it's just like a couple people who are making a lot of noise about it. On Thursday, we've got McDonald's, Altria, Southwest, and Visa. You know, I like McDonald's. I don't own it at the moment, but I do. I actually used to trade McDonald's stock, which might sound silly, but at the very beginning of the pandemic, Mike Pence came out and he said something like, fast food restaurants are going to feed America during this outbreak, because they were like the only restaurants that were going to be permitted to be open. And so McDonald's would bounce from like the 180s or like low 190s to like the 220s every couple days. And so I would swing trade McDonald's. Like I would get in around the 190s. And you know, McDonald's is a fairly expensive stock, so it's not like you could buy like 100 or 200 shares very easily, unless you have tons of money. I think I was buying like 25 or 20 shares at a time. My nose is very itchy. Sorry. I would buy like, 20 shares or whatever, 25 shares in the 180s, and it would go up to like the 220s, and I would unload it. And then it would pull back a little into the the low 200s. I would start scaling in, then it would move up. So McDonald's was one that I traded a lot. Man, my nose is really itching. Sorry. And then finally on Friday, we've got Caterpillar. Caterpillar I like. Caterpillar, I think we'll see a boost from Biden's infrastructure plans or policies or what. Man, my nose is really itching. So sorry. Caterpillar might see a huge bump from Joe Biden and infrastructure, right? Our roads are crumbling, our bridges are crumbling, our schools are decrepit. If he plans on putting like solar on government buildings or on rooftops, or maybe that becomes something that we do, that would be green energy. That would also be, and also I want to look into some solar energy stocks too. I'm really curious about those. But Caterpillar could benefit from that too, because they'll have the machinery that people will need. I know my building is putting solar stuff on the roofs, or at least that's their plan. Who are they gonna get the equipment from, right? The people who install the solar roof panels, maybe they're gonna have to lease equipment from Caterpillar. So that could be a benefit as well. So those are the earnings for this week. We've also got Joe Biden with his stimulus. So I don't know now what each individual person is gonna get. Now they're talking about $3,000 per kid, which seems like very expensive and a lot. And I know people are hurting and families are hurting and they need that money. And I hope they use that money to pay down, important things and not piss it away and buy stupid shit. But we've got, $3,000 per kid, maybe $2,000 per adult. I don't really know what that number is going to be now for individual people. That is going to be interesting because when it comes to the stimulus money, they talk to some families, they do like these polls and stuff, and they think it's gonna like spur on the economy and create like, spending and shopping and stuff. But most people that they spoke to said that they're actually gonna be using that money to back pay rent, pay down bills, and save, which is great. That's great, but it's terrible for the economy. And so these economic stimulus spending plans, if the goal is to get people shopping and buying, it might not work. So, but, I don't know. I remember George Bush, after 9/11, sent out Visa gift cards to everyone. I think it was $500 or $200, or everyone got a Visa gift card. Go, spend it. So if the goal is to get people shopping and spending and buying, send out a Visa gift card. If the goal is to help people pay the rent, then send out stimulus. But for people to say, like, I hope that they spur on the economy and shop, people aren't thinking about shopping right now. People are drowning in debt, and people have serious bills. So anyway, we'll see about that. So that's also something I guess to look forward to this week and see what's going to happen. If they put a vote to it, if they executive order some stuff, that could benefit the markets as well, or not. Because if people aren't going to be spending, then it's not going to really impact the market. It'll just, people will be paying off rent and stuff. So it's going to be curious. I'm going to be interested to see what happens on that front. So now we are getting to the point of the show. We've covered earnings. We're looking ahead to next week to answer some of your TikTok questions. So somebody asked me why stop losses do not, do stop losses work after hours? And then he had a follow-up question. Stop losses don't work after hours. And I personally don't use stop losses because I'm a full-time trader. I'm always sitting at my screen. I'm always looking at my charts. Even after hours when the markets have closed, if I know that one of my stocks has earnings that day, I am keeping a close eye on it. So let's go over an example of a stop loss. Let's say you buy a stock at $20 a share. And you say, if that stock gets to 17 bucks, sell it, I'll take a loss of $300 or whatever if you buy 100 shares. Sell it if it gets to 17. If ever it gets to 17, sell it. We're just using a regular old-fashioned stop loss, not a trailing stop. On this example, we're just going to be talking about a regular stop loss. You're in at 20, you say if it gets to 17, sell my position, I want out. And you kind of walk away. You kind of walk away from it going, My stop loss will protect me. It's there for me. I don't now have to pay attention because it's got my back. Not so fast. During market hours, it's got your back. If ever that stock drops $3, if it goes from 20 to 17, your stop loss triggers, you're out of the stock. Great. You prevented it from getting worse, or your loss from getting worse. After hours, stop losses do not work. And I'll get into why in a second. But so now let's say you're in that stock, $20 a share, and you say your stop loss is set, good till canceled, $17. When it hits 17, I want out. But that company has earnings on a Monday evening, and you're not paying attention. You're not paying attention because you think your stop loss is there for you. So earnings come out, you're not paying attention. You watch TV, you have dinner, you go to bed, you wake up in the morning, you're at the office the next day, if you still go to one of those things. And it's around 11 o'clock and you go, let me check my stocks. And you pull up your stock and you see that your stock is $13 a share. Uh-oh. But you're like, good, I don't have it anymore because my stop loss kicked in and triggered and I got out. My loss was $300, not $700. Great, this is terrific. I'm very happy. But then you come to find out that you still have that stock in your portfolio and you now have a humongous loss, way bigger than you were expecting. And you're not happy about that. Why? Why didn't your stop loss trigger? Because they had earnings last night and that's when the stock dropped. And stop losses don't work after hours. So if your assumption is that like, oh, Tuesday morning the stock dropped from 20 to 13, your stop loss would have triggered during market hours. But it happened after hours. They also don't work pre-market. I'll lump in after hours as pre-market and after hours. They don't work except for market hours. When markets are open, 9:30 to 4, that's when your stop loss works. That's it. That's the only time. So you're now sitting on a humongous loss. They don't work after hours because the way it was set up is to protect you, right? They're not trying to be like dicks about it. They're not like, yeah, let's fuck these guys over and make them lose all their money. The reason that the stop losses do not work after hours is because the bid and the ask, what the stock is being bought and sold for, has such a wide spread because there's limited volume and there's limited volatility in the after hours market historically. Historically, there's not a lot of trading that goes on. Now, I know if you're going on like FinViz or StockTwits and you're looking at Robinhood's top 10 stocks or whatever, they're insanely volatile in the pre-markets and the after hours, especially nowadays when you have all these new traders flooding into the markets. But historically, they did not work because there was no volume. There's no volume coming in. There's no trading happening pre-market or after hours historically. So you have a bid and an ask that is so wide apart that they're protecting you. They're saying like, we don't want you to get stopped out unnecessarily because there's so low volume that someone's going to put in an order at a low price and yours is going to sell and you're going to end up sitting on a loss that you shouldn't have taken, that you didn't need to take. That happened simply because the bid and the ask was so far apart. There was no news, in other words. The downside, of course, to this is when it does come to earnings, when a after hours stop loss would be beneficial to you, it doesn't work. So it's meant to protect you. It has its downsides, but there's something you can do about it, and it's simply pay attention. All you got to do is pay attention. If you know that your stock is coming out with earnings on a Monday night or a Thursday night or a Tuesday morning pre-market, all you have to do is be sitting at your screen paying attention. And if the stock starts to drop, you can set a pre-market or after hours extended. That's what you want to click on when you're doing your thing. You'll see it says day. You don't want day because that goes into effect when the market's open or when they open the following morning if it's after hours. Day is no good. Pre-market or after hours, you have to select extended. I've done videos on this. You can find them and I'll post them in the comments below so you know where to go to look. Or maybe I'll just edit it in to the video right here. So that is why they don't work after hours. So I hope that answers your question. Whoever you were, I'll tag you on TikTok. The next question that I got was, how do you manage swing trades when you for income? How do you manage your income when you are a swing trader? And this is a great question in general, not just swing trading, but in general for day traders, stock traders, investors who depend on their income to pay their bills. How do you manage? The first thing I do is I live way below my means. Second thing I do is I have reserve capital set aside for quiet months, because you are going to have quiet months. I don't know if I said at the beginning of this video, but this is the best January that I've ever had. I've made my monthly goal for the next 3 months in the first 2 weeks of January. So I am set for the next 3 months, basically. Like, I could go to the beach, or I could travel somewhere if I wanted to, if there was somewhere that I could go. So I set aside my funds. I set aside my little emergency stash, because I don't know if I'm going to have, just because January was on fire, I don't know if May is going to be super quiet or if July is going to just be a ghost town. So I set aside my funds for that. And I have automated bill pay as well. That makes it a little bit easier so I don't forget stuff. But I have my budget in mind, and I'm not a budget guy, but I have a very loose, kind of like mental budget. I know what I spend. I know how much my condo fees cost. I know how much my utilities cost. I know what my health insurance is. I know what I need to cover every month in expenses, and I have that money set aside in savings. So even if the market is quiet or slow or boring, I'm good, because that's how it's going to be. If you're a full-time trader, or you are thinking about becoming a full-time trader, the major downside, and people will say, well, if it's a downside, why don't you just go and get a real job? Because real jobs have their downsides too, man. Every job that you are going to ever come across is going to have pros and cons. One of the cons of stock trading is that you don't have guaranteed income. That sucks. And you don't have insurance either, so you have to pay. And I've talked about this before on TikTok. Maybe I've done some videos here on YouTube too. My insurance is $300, and now it's low. It got lowered this year. It was $350. Now it's $308 a month, and my deductible is around $8,000. So it got lowered. It was $10,000. Now it's $8,000 or $7,900 or some shit like that. But still, it's almost 10 grand deductible. I was talking to a friend who had foot surgery, and she was very upset because she had to pay her deductible, and she said her deductible was $300. Yeah, $300. I would kill for a $300 deductible. My deductible was $10,000 last year, and I never hit it because I am in great health. I'm in really good health. I don't I go to the doctor once every couple of years. So, I'm never going to hit my deductible. So any medical expense or thing that happens comes out of pocket. And my insurance. It's a joke. It's so stupid. But there's no health care. I don't get health insurance. And I don't get a minimum salary either. So it's important to set aside and save. I guess that was a long answer. The way I manage is I save, and I'm smart with my money. I live below my means, and I set everything aside so I can get through the quieter months, because there will be quiet months. The second to last question was, how do you reallocate funds for different trades? So the question was, let's say you're in a trade and it's a loser, it's not going anywhere or whatever. How do you determine when to get out of a trade that might not be working and put that money elsewhere? And I love that question, because it does happen all the time. You hear about traders who get these YOLO trades where they make tons of money. And you also hear occasionally about trades gone wrong, where maybe they thought that their stop loss would protect them, or they weren't paying attention after hours and the earnings came out. Or, it happens to me all the time too. I'm doing stuff. I'm looking at a lot of different stocks, and then I look away from one, and when I come back, it's down 12%, and I'm going, fuck, it happens. It's gonna happen. But you rarely hear about people who are sitting in just dead stocks that don't go anywhere. And I don't mean value traps either, like long-term investments that have no growth, no dividends, and they just stagnate at a certain price and never go anywhere and hold your money. I'm not talking about growth traps. I'm talking about trading, actively trading. So if you followed me long enough, you know that I use support and resistance lines. So resistance is on the top, support is on the bottom. And I use these lines as the stock moves in between these two ranges, and relative strength and Bollinger Bands, and I look at volume as well. And I am able to make a determination as the stock gets lower here. If it touches but doesn't break below, it might start to come back up. So I'm buying somewhere right at the bottom when it hits the bottom. Sometimes you get stocks though that trade in the middle of support and resistance. They never go anywhere, and they just kind of trade sideways for a while. trading sideways is okay if the Bollinger Bands are getting narrow, right? If they're very far apart, but if they're getting closer and closer together, it indicates that a breakout either to the upside or to the downside, so it's 50-50, is much more likely. But if that's not happening, if you're just sitting in a trade, you're tying up money that you could be using for other trades. So I absolutely get out of my losers, my sideways losers, not my loss losers. I get out of those too, but I get out of my sideways losers a lot because it's tying up money. And you know, like if you watch my videos, I say usually I'm buying in the 1,000 share block of stuff that's under $5. So let's say I'm in 3 stocks, all under $5, around 13 grand or 14 grand total, 1,000, 1,000, 1,000, and they're all, let's just say they're all $5 a share, and I'm in 1,000 of each. 2 are looking promising, the third is just hanging out. And I'm just sitting there going like, come on, dude, like, let's go, let's do something. That is money that is being wasted. It has tied up my 5 grand that I could be putting into other stocks, other investments. I could be buying 2,000 shares of something that's a $2 stock, or I could be buying 50 shares of a more expensive stock, or 25 shares of a more expensive stock, or whatever. It's money that's being wasted. So I look at the charts, I look at the Bollinger Bands, I look at the relative strength index, I look at the volume. I also look at the 1 and 3 month chart. The 1 and 3 month charts also help me as a swing trader to get an idea of the longer term, the shorter term but longer term trend, right? I'm not looking at the 5 days. I'm looking at about a month or 3 months to generally get a gauge of where the stock is going. If I see a downtrend coming, if it's been trading flat but it's kind of like tapering off and it's starting to come down a little bit, I'll exit the position. I usually exit these kinds of like sideways stocks. I give them about a week, maybe 2. And then I lose interest and I pull the plug and I get out and I reallocate into something else. Unless I see a more promising stock that is doing something that I want to be a part of really quick and I need the money, but it's sitting in this quiet stock that's trading sideways and it's after a couple days, I'm out and I'll put that money into the stock that works, and then I'll always refer back and I'll always check that sideways stock. I keep it written down on my little notepad because you never know. Last question, which was also a good one, was how do you deal with motivation? The guy was a little bored, I guess. I don't know if he said that he likes making the money, but he's losing motivation. For me, it depends on a couple things. One, it depends on how long have you been trading, right? I've been trading for 10 years. You're going to lose motivation. It's going to happen. TikTok helped me in a big way. I was losing motivation. I was getting, you get kind of in a rut. Like after a while, I was just kind of bored, it became very like second nature to me. Like I wouldn't do any research. I wouldn't really do anything. I would just like glance at a chart. Yeah, this is going to go up. I'll buy it. It would go up a little bit. I'd sell it. I'd take my profit. It was just very like mundane and repetitious and boring. That was about after like the maybe like 6 or 7 year mark. I started to just be like, and just didn't really care anymore. Trump got elected, and I thought, oh boy, bad things coming. And I got out. The first year, I barely made anything, which goes back to the how do you manage for income question. You got to have money set aside, right? You got to have money set aside. You have to live below your means. I know everyone thinks stock traders have Lamborghinis and private jets and shit like that. Most of us don't. And the people who do probably made their money elsewhere, or they have very rich parents. So I backed off. In the first year of, when did he get elected? 2016. I kind of backed off a little bit. I didn't do a lot of trading, and the markets went crazy. So big mistake on my part. I just kept thinking, oh, we're hitting new highs. This isn't going to last. And they just kept going. Second year of his presidency, I was like, okay, I'm still a little cautious, but I'm going to start. And I would start investing a little bit more. And so the second year was a little bit better, but I was still kind of like in a rut. I was bored. I wasn't really feeling it. third year of his presidency is when I started my Instagram account to help people trade stocks, and pivoted away from Instagram because Instagram sucks and into TikTok. And that's when I got like the surge of interest and like that little spark again. It was very exciting to me to like start talking about this stuff, because I don't know if you know that old quote, like, I've forgotten more than you'll have ever learned. That was where I kind of felt like I had learned so much over the last 10 years, or over the last, 7 years at that point, that I kind of forgotten, because I was just so like in a rut. Like I was just clicking by. And everything that I had learned, I had forgotten about. And so coming on TikTok and having people ask me questions, I would be like, fuck, I forgot all about that. And those like interactive stuff helped me become a better trader, a smarter trader. Kind of like jogged my memory a little bit about the stuff that I had forgotten. So I was like, I wonder if I can apply this to my new trading and whatever. And the markets changed. So there was a lot of that going on as well. So when the markets changed, my trading approach changed. So instead of swing trading, markets were like this, I was becoming a day trader. And I actually really liked that. So that's one thing you can do to change your, if you're losing motivation, is just maybe change your approach, change your style. Also, if you're losing motivation because maybe you didn't really explain why you were losing motivation, so I'm just spitballing here. Maybe you worked in an office and you miss interacting with people. Maybe that's why you're losing motivation. So maybe you go and work at a Starbucks once or twice a week. You could do that. You could go work at a different cafe or diner or whatever once or twice a week, just to get out of the house, see people, if that's why you're losing motivation. Maybe if you can work from anywhere, if you're not like nailed down to a house with like a family and kids and stuff like that, and you can work from anywhere, go hop in the car, go on a little road trip. Work from somewhere else, get an Airbnb, get a hotel room, change up your scenery a little bit. I don't know. You could do that too. That's one of the benefits. We talked about the cons of trading. One of the benefits of trading is you can work from anywhere. Really, you can work from anywhere. So find some little tweak to change, whether it's your trading style or just your scenery, your house, your place, Starbucks, a little road trip, change things up a little bit. So I think that just about covers it. That is today's episode of Cash Out. Please like, subscribe, hit the bell, do all that stuff. Follow me on TikTok if you're not, because I answer a lot more questions on there. This is probably the longest episode we've done, so I'm going to wrap it up. Thanks for watching, and have a good day.